Taking high quality setups enables us to lose more, yet still be profitable and make money consistently. And in this video, I want to talk about high quality setups when all the factors align with our emotions. I'm going to really get in detail about these emotions because it's honestly something every single trader struggles with, including myself and even multi-million dollar traders on Wall Street. Emotions hinder our success. Whether it be for one trade, whether it be for multiple trades, emotions are our biggest enemy. And the past few days, I've honestly taken some trades based off of my emotions. I'm not very happy about it, but I'm going to show you the results of what happened. And then I'm going to show you the results of a high quality setup I took and its result. The psychology points I'm going to relate to the technicals of each chart is something that I want you all to pay close attention to if you want to become a better trader. Now, a few weeks ago on my Instagram, I posted a picture on @Ameritrade. I'll post a link if you want to follow it in the description below. I posted about reacting to the market and never trying to predict what's going to happen next, instead react. And I think this is extremely key because no one knows what's going to happen next in the market. What we have to do is once we get our confirmation signals, once we see our edge and our plan become evident and apparent, then we take the trade and we put risk on the table. We cannot control what the market does, but we can control our emotions. And that is very, very important. And that's going to bring me to my first point. So if you trade the chart and not what you think is going to happen, trading becomes so much easier. Believe me, I've dealt with new traders that have zero experience, and I've sat with traders on Wall Street that have 20 plus years of experience. If you trade the chart, not what you think is going to happen, trading becomes so much easier. The market is the storyteller. We as traders have to comprehend, use clues to understand what is going on and what the story the market's trying to tell us, and that's how we get trades to put on. It's very important to play levels and not bias. Like today on the S&P 500, the market rallied inside of this supply zone at 4159, sold off, invalidated demand, and had a very clean sell-off straight from our pre-market plan from this 4195 supply zone all the way down into the 4085 demand zone where we actually bounced going into end of day. But I'm going to show you how our brain is going to play tricks with us during these movements, that the chart is telling us something else, but our brain might be saying another different thing that's going to confuse us, and that's going to make us make decisions that we shouldn't be making, that we should only be making decisions based off the chart and the price action that the market is giving us. Ignore all of the other noise. When we have a strategy that works for us consistently in the long run, this is our edge. It gives us an advantage over the competition in the long run. It's our edge, it's our strategy, it's our plan. When we have this and we know it works out for us in the long run, for me, supply and demand is my baby, it's my bread and butter, it's what I consistently make profits on in the market. The only thing that's going to prevent us from making these profits is our emotional decisions, because this is what hinders our success, whether we're talking about one trade, whether we're talking about, multiple different trades in a consistent basis. Our emotions, if we have a system, our emotions are going to be the only thing that prevents us from making profits. Our emotions are our greatest enemy. Now, we tend to make decisions based off of irrational, emotional decisions and not factual pieces of information the market is presenting towards us. For example, we might sell a position because we're fearful of losing profits, or we might get into a position, or we hold on to a $1,000 winner, but maybe now it's only a $100 winner because we got greedy, we wanted to make more profits, and now we're losing more profits because of that. Fear and greed are bad, bad emotions, and we can't avoid them. They're, ingrained in us. Another thing, this is what kind of, happened to me this week. I'm going to show you the trade, but the itch to put a trade on because we want to be active, we want to make money, we want to be right, we want to be successful. Someone come up with a name for this, the itch to always have a trade on. It's something that every single trader on their journey will go through, and it's sometimes stuff that I still to this day go through. It's the itch to wanting to make money, wanting to make profits. Our ego wants to be right all the time. We don't want to be wrong. We want to be successful. We want to be at the top. And we always have an itch to be active and putting a trade on when sometimes we really shouldn't be putting a trade on. These decisions get made when we should not be trading. In conditions we know to sit sidelined, in conditions that we know to be extra patient, we tend to get this itch. And 90% of the times, we still take these trades, even though we know in the back of our head not to take them. And 99% of these times, they're going to be losing trades. You might have one anomaly that, you win on it, but 90% of the time, they're going to be losing trades. And this is going to bring me into high quality setups only. So this week so far, basically Tuesday and Wednesday, by the time I'm recording this, my emotions honestly have not been very good. I've been making stupid decisions. My plans have been working very, very well, but my execution is lacking because of my emotions. My execution is not lacking because of my technicals. So I want to go into the pre-market plan today on Wednesday, June 1st. This is on the S&P 500. I post these pre-market plans every single day in my Discord, setups I'm watching, levels I'm looking out for, and the Discord is available for Trade members only. This is on the S&P 500, and I said we are very balanced with the upper range being this 4159 supply zone and the lower balance being demand at 4132. I expect them to be tough support and resistance until broken out of balance, which means continuation in that direction. Other scenarios where if we could get above this 4159 supply zone, we were going to test 4200. However, scenario number 2 was if we could successfully trade below 4132 demand and not show signs of buying, then I will be focused as there's not much demand until 4085, which is the lower zone in this area over down here. So again, we had a balanced range. We bounced off of this 4132 demand zone overnight, and we also hit this 4159 supply zone yesterday and sold off. We're consolidating in this tight range, and I expected either zone, once tested, to show the same amount of responsiveness, meaning if we hit supply, I expected supply to reject, and if we hit demand, I expected demand to bounce as long as we have responsiveness from those participants. So the market opened up. And this is what I mean about trading the chart and having an itch to put a trade on. I had no reason, I had no business to take SPY long, the S&P 500 long today, now that we have these levels, because of this. So the market opened up. I saw some very strong buying pressure. And actually in the Discord, I'm going to post this right over here, I was watching the 4155, 4151 level. If it could be held, I expected a test of 4170. If we broke below 4155 to 4151, this is going to invalidate the long and the market is going to pull back off of supply. Again, I come up with my levels of interest and I gauge what price and volume does at my levels of interest, which is basically reacting to what the market is giving me. So I was watching the market long and reviewing this trade. I had absolutely no reason to get the market long yet, but instead I thought something was going to happen. I did not have proper confirmation, and I had an itch to put this trade on because I had the fear of missing a move if it did work out and if my analysis was correct. So remember from the pre-market plan, I said I wanted to look to take the market short if we reject this supply zone. Yet me at 936, when the market looked like this, I took it long because we held above 4155. The mistake with this trade, as I'm going to go to a 5-minute chart, was we never cleared the supply zone that we rejected yesterday. So coming into this level, I'm expecting the same reaction that we saw yesterday, where the reaction yesterday was a sell-off. But because I thought something was going to happen, I jumped the gun. I had the itch to put the trade on. I entered this position prematurely, and I should have waited for more confirmation. And I attribute this loss to my emotions because I did not wait for proper confirmation, and I wanted to have a trade on because I did not want to miss the setup, and I wanted to get in at a low point that if we did rally, I was going to be in at such a large or a lower price that if we did move up, I was going to make a lot of money on this position. So I should have waited here. The market came up, going back to a 1-minute chart now. We double topped inside of supply. When I saw this, I should have exited my trade. This is a red flag. This is reacting to price and volume, and I should have got out of my long immediately. Instead, I waited. I waited for this to consolidate, and as soon as we hit VWAP and broke below it at 944, I got out my position and stopped out of my longs. So the point I'm trying to make here, without being repetitive, is I let my emotions take over. I did not wait for confirmation. I was longing inside of a supply zone without really letting the market break above supply or create demand in it. So I got in prematurely, and I had no reason to be in this trade. Now, what's good about this, and this is what I mean about taking high quality setups, is what I did was once I got out of this position and I saw 4155 act as resistance, I flipped to the short side. So as the market came up over here and 4155 came resistance, it gave me a confidence boost that, okay, we just double topped inside of supply. The market is rejecting. We're finding resistance at 4155, my key level that I spotted on the tape. Why I posted that was in the pre-market plan, intraday commentary was on the tape, the level 2 in time and sales, we saw some very strange buyers trapped at 4155. So I said, very strange action. I don't like it. And as long as we could stay below 4155 to 51, we should move down and test 413532. This is reacting to the market. This is not acting based off of what I think is going to happen. This is reacting to the price action and taking a trade when the market tells me to. This is not taking a trade because I think something is going to happen and my thoughts aren't going to magically make the market move down, right? I don't have that power. So as soon as 4155 acted as resistance, I got a confidence boost. I played the market short, and we had a clean sell-off into 4132. So the lesson here is react to the market, what it gives you, take it, put risk on the table. No one knows what's going to happen next. But if we could just trade our strategy, trade our edge, and trade what we know works for us, we're going to make money in the long run. Maybe it doesn't work one time. Maybe it doesn't work another time. But in the long run, if we leave our emotions out of it, we trade our plan, we play our levels, we're going to have a solid setup. This thing sliced through demand, and this thing continued to sell off and continue to move lower. Now, right into 4085 from the pre-market plan. I don't want to sit here and, have an ego saying, how well the pre-market plan worked out, because the point of this video is to show you to play levels and not bias. If we played the plan, right, acting as 4159 supply as an upper balance range where I expect it to be tough resistance, and if we could trade below 4132 demand, we're going to be focused on shorts as there's not much demand until 4085, right? These are our levels. But when we wake up, when we go into the market, we see it opening up, we see green flashing on our charts, we see red coming up on our charts, we see the market moving up, we see the market moving down, we're searching on Twitter, we're looking for other people's opinions, things of this nature. That's all noise. But if we just trade the chart and react to what the chart tells us, we play our levels, we follow our plan, and we leave our emotions out of it, I can guarantee you will become such a better trader. But it's vital for you to have an edge and for you to have a strategy that works for you the best, that you've tested, that you've collected data with, that you can consistently scale up, make profits off of it. And if we leave our emotions out of it, it's going to really bring us profitability and consistency in the long run. If we followed the plan, if we played our levels, let's just hypothetically speak from the high at supply to the low at demand. I pulled up the SPY put contracts over here, and they went from a low of about 57 cents to a high of about $5.12. That's a 780% gain in about 2.5 hours, straight from supply into demand. No one's ever going to buy the top and sell the low. I'm just showing you the power of if we leave our bias out of the way, if we play our levels and react to what the market's giving us. You're short at supply, you're long at demand. The market doesn't always, move from supply to demand. You're going to have roadblocks. But in this example, these contracts went up over 780%. A 10 contract position, which costed us $500, would have made over $5,000 profit. I posted a private trade recap yesterday on May 31st of this trade that I took in my Discord. This was a losing trade that I contribute to correct analysis. My technicals were on point, but my execution was flawed because I made an emotional decision. So the market sold off, and if we were watching the tape, we would have saw some heavy bids come into the market around 4110 and around 4107. So we were watching for this level to hold, and if we did get below 4107, this was going to, bring a further sell-off. But because we spotted bids on the level 2, I was very confident that this level was going to hold. So I played it long when the market looked like this. And my mistake was, this is not my strategy. This is not my edge. We broke below demand. This invalidates the zone for me. So I had no reason, right, to get long down here. We broke below this demand zone. So this becomes a no trade for me because we did trade below it. So basically, with that understanding and that context, I got long down here just because I spotted bids. That's not my edge. That's not my strategy. And I entered this trade because I recognized those bids and I expected the market to move up without trading my strategy and trading in a condition that I knew I really should not be traded in because I wanted to catch the bottom and I wanted to see this thing reversed. Then the market came down. Those bids defended it again. And as soon as we sold off below the low, I stopped out of my position. And 10 minutes later, it reversed. My analysis was correct. I did not look to re-enter. My emotions were through the roof. And I would have had a really, really good setup on my hands if I did not let my emotions take over. I maybe looked to re-enter once new demand formed in this area over here where I'm hovering my cursor. But I entered this trade because of an emotional decision. And these emotional decisions bring me pain, not physically, but mentally, because it damages my thought process for future trades. So because of this, even the trade that I took on Wednesday, the long in the morning, right? This was an emotional decision. Whereas when the contracts, sold off from the highs, they absolutely exploded. So what I want everybody to do, we all go through this to get better at it. You have to do this. This is inspired by Brett Steinbarger. He's the GOAT. But I want everyone to become aware of these emotional decisions that you want to change. For me, it's making stupid decisions based on myself wanting to be right and myself wanting to make money. I still go through it to this day, and I should know better because I have an edge that works for me. And every time I deviate away from that edge, I lose. So become aware of these emotional decisions, whether you have a strategy or whether you don't. I don't care, or I do care. You have to have a strategy, but you have to become aware of these emotional decisions that you want to change. Then relive in detail these specific failures in the market, which resulted from these faulty emotions and decisions that you made, which you want to trade. So I'm going to go back this weekend, review this setup that I took that was a loss. Review these calls that I took was a loss, right? Write in my journal how an emotional decision it was. I'm aware it was an emotional decision, and I'm reliving it in detail, the specific scenario of what I was thinking and why I took the trade. Our brain is subconsciously wired to respond to these dangers, right? When we see them, our brain subconsciously becomes aware of them and we respond to them. And because of this, it tries to protect us at all costs, whether we're conscious about this or we're subconscious about it. Study the brain. It's really crazy the things that it does and what it makes us do and feel and, attract. And our brain subconsciously protects us at all costs. It protects us from fear. It protects us from danger. And if we become aware and connected to these emotional thoughts on a conscious level and these dangers, we're consciously not going to gravitate towards them again. This is why I think experiencing pain and experiencing failure in the market is something that every single successful trader has to go through before they can make profits, because you got to feel the pain or the emotional damages that the market will bring if we make decisions based off of our emotions. So once we feel this and we become aware of it, our brain is going to make us not gravitate towards them again because we are connected to them. We are wired to respond to them, and we are conscious of these dangers and these thoughts. So this fear brings motivation, basically. And our brain is not going to let us gravitate towards them again because we don't want to feel that pain, that mental pain that these losses bring based off of these emotional decisions. We cannot get rid of these feelings and these emotions entirely. They're normal. They're part of human nature. No human is perfect. No trader is perfect. I know traders on Wall Street making 8 figures a year, and they tell me how they're not perfect. They take losses. They make decisions based off their emotions. No trader is going to be perfect, but you don't have to be perfect to make money. You just have to trade your edge. It's normal. It's part of human nature. If you try to get rid of these feelings and emotions entirely, you are just going to struggle. I just want you all to become aware of them, not get rid of them. And the most constructive step we could take is full acknowledgement and full awareness, and I guarantee you that's going to help. But please make sure you have a strategy that you know works for you, that you've tested. For me, it's supply and demand, price and volume analysis. For the members in my Discord, I'm sure a lot of them will say the same exact thing, and it's very key to understand this if you want to be successful. So I'd appreciate a thumbs up on this video. These types of videos don't get a lot of love because they're all about emotions and psychology, and everybody wants to just learn how to make money, and they skip this process, and those traders are the ones that fail. So if you stuck to the end, you enjoyed this video, I would really appreciate a thumbs up. Let's try to get 600 likes on this video. Comment if you have any questions, and check out the links in the description below. I offer a very in-depth and educational course. It comes with access to the Discord at no extra charge.